Good morning, Bitcoiners. Hello, and welcome back to a very special edition of your Bitcoin economic calendar. Today is Monday, February the 8th, and we have some very important announcements from Ledn, as well as some very important market-moving news. First off, we are very proud to announce our most recent financing round for $2.7 million led by White Star Capital. We're going to be talking about this in much more detail. We're also incredibly proud to become the first digital asset lending company to complete a proof of reserves attestation by a public accountant, Armanino LLP. We're also going to be covering that in a lot more detail. Lastly, we're going to be touching on the launch of Ethereum Futures on the CME this week, and also the recent purchase of Bitcoin that Tesla did for $1.5 billion. Much more in today's analysis. So as I mentioned earlier, today we're very proud to announce our most recent financing round. The round was for $2.7 million in equity and was led by White Star Capital with participation from Coinbase Ventures, Global Founders Capital, CMT Digital, Kingsway and Darrow Holdings. In addition, we're also incredibly proud to become the first digital asset lending company to complete a proof of reserves attestation by top 25 public accounting firm Armanino LLP. The existing Ledn clients that had a balance as of January 31st at 11:59 p.m. Eastern Standard Time will have their assets been included in the report, and they will see instructions on your dashboard on how to check that you were included in the report. So much more details on our proof of reserves standards in our proof of reserves page. You can see this here, ledn.io/en/proof of reserve. And you can also check out our job postings page, which is also here in our Learn More under jobs. And in here, you can see that we're hiring. We have quite a few open positions, so we encourage everybody to take a look. And if you or anyone in your network you feel is a good candidate for the role, we invite you to submit an application, as we'll be growing our team quite significantly in the next few months. So onwards to our Bitcoin analysis. So starting our analysis with Bitcoin, we see that last week Bitcoin had another record-breaking week, closing at 38,871, up 17.3%. We already see that it is off to a very meaningful start today, and it's only Monday, and this is largely to do with the announcement from Tesla this morning. First, let's cover a few of the important things that happened last week. So last week we had Michael Saylor's a Bitcoin for Corporations workshop, which drew great attendance and solid contributions, one being from Ross Stevens, who went viral around the Bitcoin community with his takes around central banks and money supply. Elsewhere, we saw that Elon Musk removed his Bitcoin hashtag from his Twitter profile and tacitly started endorsing Dogecoin through a meme, which has made the Dogecoin more than double. Doge is a meme coin, and so this is yet another example of symptoms of excess in the financial markets by way of these types of financial roulettes that seem to keep appearing in the markets. To highlight another influential billionaire that has a Bitcoin hashtag in his profile, we wanted to take a quick look at Ricardo Salinas. He is the founder of TV Azteca and Banco Azteca. He is a very influential person in the Mexican economy or community, and he is one of the bigger guys, or I guess most important or influential billionaires that continues to have a hashtag Bitcoin in his profile. To briefly touch outside of Bitcoin, wanted to open up a recent report that came out which talks about the housing market in Canada. And I thought this was important to highlight because it brings up a very good point as it illustrates taxation by inflation at work. Check out the findings of the report, and this is the part that's highlighted behind your screen. It says, from 2005 to 2020, someone owning a two-story home in Vancouver created approximately $600,000 more wealth than someone earning the median income during this time. This is an annual average of $40,000, which actually exceeds the 2020 median income in Vancouver. Just to earn as much as a two-story homeowner, you need to earn approximately $80,000 per year from 2005 to 2020. Basically, this is saying that the value of homes is appreciating at a faster pace than the income of the potential people living in that home. So why does this happen, you may ask? Let's check out Canada's M1 money supply for the last 5 years. You see that? It's vertical, pretty much. It's exponential. And what this illustrates is that printing money takes value from non-asset holders and distributes them to asset holders. That's the cost of printing money to stimulate the economy. We need to do that to pay for government deficits, etc. Most countries' money supply will end up looking like this. And it's not because, regardless of how well an economy is managed, most money supply curves will end up looking like this. And again, it's not because central bankers, there aren't central bankers that are saying this isn't prudent, but because these central bankers that are there, right intentions as they may have, they are human and they are up against political forces that are much, much larger than themselves. So inevitably, they have to get out of the way and let the politicians keep printing. Bringing it back to Bitcoin, we are going to be talking about what the options markets are showing us for Bitcoin's February expirations, as well as what the futures markets are showing us in our What's Ahead section. A note to keep in mind is that Ethereum futures are starting to trade in the CME this week, which could be a catalyst for all crypto markets. And the recent announcement from Tesla that they just purchased $1.5 billion in Bitcoin will very likely continue to be a catalyst for Bitcoin prices in the coming weeks. So something to keep an eye on, and we'll touch more on this in the What's Ahead section. Moving over to the S&P 500, we see that the market last week had a phenomenal week. This is the weekly candle from the last week. It closed the week up 4.65% at 3,886 points. The very interesting thing, if we go out to the daily candles, you see that it actually rallied every single day last week, and it closed very close to the weekly highs, which is typically seen as a very positive sign from a technical standpoint, because it means that there may have been pent-up momentum to the upside. We are seeing some of that continuation here on Monday. So it climbed on relatively average volume, so it's not necessarily a massively decisive move, just given by the sheer number or the sheer volume that was traded. Typically, when there's more volume traded, that means there's more intent in the moves. However, we are starting to see some potential positively good signs, which is that the market seems to have, the GameStop situation seems to have been resolved without taking too much more collateral damage. We look at GameStop coming back from all the saga, now back to relatively normal levels with seemingly not too much collateral damage, which is potentially a breath of relief for a lot of the institutional investors that may have been thinking that there was going to be some major overhaul coming. The other interesting thing is that the markets are rising despite a slight dollar reversal, so a potential reversal in the dollar index. We see that last week the dollar index actually rallied quite substantially, which typically is a headwind for equities, but we saw that both equities, Bitcoin, and the dollar all rallied last week. This is very interesting and something to keep an eye on because it could create interesting dynamics. We're going to talk about this in the What's Ahead section. Bringing it back to the S&P, there's a lot of debate around the U.S. government around how the new round of stimulus is going to get, the new round of stimulus checks is going to get distributed, but the funds will certainly be distributed. And we'll talk about the potential implications of that in our What's Ahead section later today. Moving over to gold, we see that it had another bad week last week, down 1.83%, at closing at $1,812 per ounce. It was down significantly more than what the dollar rallied. So as we said, there's an inverse correlation between the dollar and gold. Dollar rallied 0.51%, gold dropped 1.83%. So that is something to pay attention to. Given the backdrop of an almost certain stimulus package, inflation pressures all around, and even things like oil. Like if we look at oil last week, it was up 9.16%. So we're seeing that equities seem to be picking up bids, so are commodities. Inflation expectations are picking up bids, and gold seems to be having, continue to feel heavy or be under pressure. So this narrative that gold is falling out of favor for potential other allocations and portfolios seems to be playing out. So this is something to keep an eye on, as the gold market is a massive market from which a significant amount of value seems to be open to rotating out of. This could create a tailwind for other markets such as Bitcoin. So something to keep considering. Moving over to the FTX DeFi index, we see that it had another monster week, up 30.85%. There are many tailwinds in this sector, as we have discussed as of late. Grayscale last week put out a piece on valuing Ethereum, and today, or this week, the Ethereum futures and the CME are launching. This could be a tailwind for this sector in general, and this is all happening, mind you, despite the fact that gas fees are at astronomical levels. We're seeing people citing gas fees of over 250%. Sorry, I'm just trying to find here the link for the gas fees. I'll show it in just a second. So here is the gas fees. This has been referenced all over Twitter. People are basically complaining that it takes up to $250 to transact. However, this does not seem to be affecting the demand for or appetite for DeFi tokens, and we're seeing it, the market seems to be continuing to get heated. It is important that with attention into these markets comes a lot of volatility. So it is very important that market participants are very prudent as markets get heated. Moving over to our Bitcoin mining difficulty commentary, we had a new difficulty adjustment kick in last Saturday evening, which brought the difficulty to 21.43 terahashes, a new historical high. Since then, hash rate has continued to pour into the network, and the next difficulty adjustment is already showing a potential increase of another 3.51%, which should take us to a new all-time high in 2 weeks. This type of activity in the mining space is consistent with what we've been writing about. Continued hash rate and investment in mining infrastructure typically follows large appreciations in price. So the trend is potentially not likely to stop anytime soon. While this is great for the Bitcoin mempool, we still see that the demand for block space has been at tremendous levels. Mempool size is still at near historical highs. So this, although hash rate continues to pour in, will mean that transacting in the Bitcoin network will be more expensive than usual and may take longer than usual. So something to keep an eye on as you're planning your transactions for the week. Remember, all transactions from Ledn clients to Ledn clients are free. So something to keep an eye on if it helps. So as always, we leave you with what's ahead for the week. With Tesla's announcement of the purchase of $1.5 billion in Bitcoin, there will likely be a lot of attention in that, and that may be a catalyst for prices in the conversation or narrative around social media and mainstream media into the coming week for Bitcoin. Additionally to that, we have the Ethereum futures launching on the CME today, actually, which will be a focus in the industry and potentially another tailwind for asset prices. Now, on the Bitcoin futures side, the futures curve is showing a normal contango, with prices stopping at around the $40,000 level for the June contracts. In the options front, we are seeing a lot of open interest between the $40,000 and $48,000 price or strike prices for the February 26 contract expirations. Those are levels to keep an eye on as we enter into the week. Elsewhere in the macro world, the potential reversal in the US dollar index can have profound ramifications. It's important to consider what could be behind this dollar reversal. What's happening in Myanmar, the military has overthrown the government, may have investors reconsidering the political risks of investing in emerging or frontier markets. Global political tensions typically lead to a rally in the US dollar. This is typically referred to as a flight to safety. In addition to that, there's debate around the US Senate on how to split the US stimulus checks. However the pie is split, some of the new funds will inevitably find its way into some financial assets and consumer goods, which should be good for US equity markets and the US economy in general. The new influx of money supply could potentially neutralize some of the side effects of a rising dollar and potentially damper the reversal in the index that we've started to see. Surely that's what the Fed would like. The alternative, which is that markets continue to rise with a rising dollar, just continues to delay inflation pressures in Main Street in the US and lets asset prices run higher before we start seeing inflation in day-to-day items. This means that the wealth gap between asset holders and non-asset holders grows larger. Luckily, more people around the world have access to Bitcoin each day to protect their savings. Now, as always, we will keep you posted on any other relevant information throughout our social media account at HODL with Ledn and right here through the Bitcoin Economic Calendar. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning 6.1% APY on your Bitcoin and 12.25% APY on your USDC. If you liked it and learned something today, I welcome you to subscribe and like and share the video. Thank you, everybody. Have a great week and see you next week.